Okay.
So,
All right, right now it's Igor and Kent. We're later than usual. It's almost 11 o'clock in Chicago. Stock market just made a new high for the evening. We're testing our highs of the week and going through them a little bit. NASDAQ's up 20, bonds are flat. Uh, Grains are up a little bit. Currencies against the dollar are mixed. Crude oil's down 14 cents after being over 70 most of the trading session. Gold is 18.15 in a trading range, but holding up. First off, Igor, why don't you show the people what you have in gold? Gold is paying a little bit for tonight. This looks pretty decent considering the unemployment's coming out tomorrow. Even with a unexpected number, I think both levels are safe. Show them what you did.
so we did 1840 call versus 1780 put. And let's see. Let's take a look at the board, gold board. 1840 is right now 1690, and 1780 is 17110. We sold 60s on the 40 calls, and on the 80 puts, we sold 70s. Probably this time you can do a little better, but not by much, maybe by 10. So the metals right now paying up due to volatility. Well, actually,
Well,
due to
the,
unknown number tomorrow. Yeah.
the volatility earlier in the day for tomorrow's expiration was 9, just under 10, and it's like 15 or something right now. So not bad. Show the S&P, because we're still carrying a short position. You decided to do a another 1x2, but you got a decent premium. You did it a little earlier. You did it before the close. Show the folks what you did.
So we did actually 45 even 44.90 put, and we put it for next to nothing on the margin. I think our change in the margin was maybe $20-30, and could be because of the low volatility. Last I looked at, there was 9 plus. We have it against the short futures position. So we're either going to collect buck 85 on this spread if the market is going to stay up over 45, or we're going to be taking out the future position at 44.80 synthetically. At which point we will have to do something to balance out our in the money put for September 2020.
Okay. Yeah, I think some of the reason some of our margins have been a little funky lately is because you got these different months, going. Got the options on different months, and then you got a future in a different. But here's a concept: since we could enhance what you have already done, you have the even versus the 90. You could actually do the 20. What's the 20 versus the 10 right now?
And I was about to ask you the same thing.
You good. We think
Since
of
we're 50, yeah,
2 years to do this, but
imagine that.
imagine that. Yeah.
Okay, so where's my S&P for tomorrow? Oh, there it is, week one. So since we have about close to $50 up from our 1x2, should we do something closer?
I would consider the there's two things you could do. One would be the you could do the 2015 or the 2010.
We could, well, I think one of the things we could do, we can book the profit on the
Leave it on because
5090.
it'll carry itself down. Let me let me look at your pop. Why is this not big all of a sudden? I was looking and it got small. Okay, now it's big again. Okay, your screen. So the 20 is $4.
20, 45, 20.
No, hold on. Go down to 10. So 10 is to. It actually doesn't pay very much. You know what? Forget it. Because look, if you did you have the even that you're long,
Yeah.
so you could do like the 10.05. So you're gonna get 320 and gonna pay out. You may get $1. Not forget it for $50. You could sell as a $65 call. What's a call 1x2 just for the hell of it? Because if you notice the upside, they're paying for calls all of a sudden, which normally they don't.
Yeah.
Uh, $60 call is about, yeah, it doesn't even pay much on that.
80 versus, let's say 1x2, 80 versus 2. So that's 20 cents. That's not really much.
Well, no, you'd have to just, I mean, like the $65 calls a buck. I would just sell one of those outright, just that it seems high. But wait a second, we are 55. No, we're, what are we?
Well,
Sorry,
well,
3.
well, 44,
Sorry, no, no, forget it.
43, 50, 44, let's
Just let
say.
it go. The gold was a decent fill, and your 1x2 was perfect. You did earlier, so let it go.
Well, yeah, I mean, this market can swing hard depending on what's the numbers tomorrow.
Well, if you
Uh,
go to your chart for a second, then we'll cut these people loose because we don't want to bore them. Go to your chart of the S&P. We're now over your line. Remember your famous up and down line?
yeah,
Yeah.
this line right here, this is my goal no go, and it looks right now like it wants to race to the moon.
Well, it looks
But
like 60. I mean,
yeah,
just that's the point on there. Your Bollinger Band. You're at the upper part of the band right now. It is the evening, and I've noticed this because lately I don't get to sleep very much out here and watch the market at night. Very little volume moves this thing a lot now.
yeah, but just look at this. We have in the teens.
Mm,
The book is in the teens. Usually we have 300 contracts there.
right,
Now that's a big day.
right. So
Interesting.
very light volume can move us. So we could go to 60. You could have a, you know, in the old days when we were on the floor, and I had my partner in New York City, the famous one. He used to, on days like this, we would do our selling of all our teeny options, and then on the bond futures, we would have a very scientific system. We'd put in a limit order, $1 lower, $1 higher, buy it $1 lower, sell it $1 higher. You know how many times we got filled on both sides?
I'm dying to find out.
Out of there's 12 of them every month, every year. Out of 12, eight times a year, we usually fill on both sides.
Really?
Yeah,
Wow.
I haven't done that since probably 2009, but from 2000 to 2009, that worked a lot. That is just, it looks like that in the S&P. Like you could sell, we could say, well, buy the futures 20 higher and sell them 20, sell them 20 higher and buy them 20 lower. It would be something similar. On
Yeah,
this number, we could go to 60 and go to 20 and vice versa. Go to 20, go to 60.
yeah. As you can see, I was just going over the volumes and the time periods. Look, this slam down was almost identical volume, 400,000 contracts as the bar up. You see that bar up that created new high
Mm-hmm.
at 8 in the morning, and the following bar down that at noon, almost 10 volume. Now we're making a new high on a function of the like minuscule volume.
I talked to you 30 minutes to the close, and all of a sudden we started rallying out of nowhere. It was flat.
25,000 contracts making new high.
Right.
What?
I mean, well, it's just is what it is. Anyway, I think what we have is acceptable and reasonable risk-wise. So let's not put ourselves in any unreasonable spot. So after all, we want all the clearing firms of the world that are like us.
Okay, we're coming up on the 10 minutes. Let these nice people go
All right, let them go to.
get some rest.
All right, you too. Have a good night.
All right. You too.
Right.